Hey guys, it's Kenny from my charts. I'm going to be a host for today's video, which is actually our first video. As you might have seen on the title, we are going to be talking about candlestick analysis today. Hope you enjoy this one. Let's get straight to the video.
So guys, before we get into the charts, I would first of all want you guys to know that we have two types of ways to trade, right? We have fundamental trading and we have technical analysis. Well, fundamental trading is whereby uh, you wait for the news to be put out and then act upon the news, right? So you sell the markets or buy the markets depending on the news that you heard, right? Depending on the news that were put out. These news are put out weekly, monthly, or even per year. We have news which are stronger than others and others which are weaker than others. So some are more likely to affect the markets than others. We also have breaking news which will directly affect the markets. So the news which are not scheduled, for example, the Ukrainian war. But we are not going to be looking at fundamental trading, we're only going to be looking at technical analysis. Well, technical analysis is whereby you analyze the market and then act upon what you're seeing. And I would highly advise new traders to only be looking at technical analysis for now until they have more experience because this is more reliable. So let's get to our candles. So you guys remember we're talking about candlesticks today. I'd first of all want you guys to know what a candlestick is. So this is a type of price chart used in technical analysis that displays the high, low, open, and the closing in a specific amount of time to best describe what's happening in the markets. So in case I lost some of you guys there, let me just explain it better. So we have two types of candles. We have bullish candles and we have bearish candles. Bullish candles represent buyers in the markets. Bearish candles represent sellers in the markets. So this green candle is bullish, this red candle is bearish. So as you guys can see, this was the open of this candle. You guys might ask yourself why there is this thin line called the lower shadow or wick. Well, this is an exhaustion phase. No, this is an exhaustion area showing that the sellers tried to bring down the market, but buyers were stronger, so they pushed back the market. So this week is a sign that sellers tried to push down the markets, but uh, close, could not fully close bearish. Right. So you guys can also see there is an upper wick here. Well, this is because uh, buyers also pushed the markets higher than where they closed, but sellers brought it back, and then it ended up by closing this. So these wicks are exhaustion areas. So bearish candle. This is pretty much vice versa, but let me also explain it. So there is a difference between these two candles. As you can see, bullish candles open from the downside, but bearish candles open from the upside. So you guys are seeing the wick, right? This is the exhaustion phase, which means buyers tried to bring it up, but they were weaker than the sellers, so the sellers brought price lower, which left this upper wick. You can also see the lower wick, which means sellers tried to bring the markets lower, but buyers brought it a bit higher, and then market ended up closing here instead of here, which also created this exhaustion area. So let us look at the charts. Uh, by the way, my charts are customized, right? So instead of green, I have blue, and instead of red, I have black. This is just colors; it changes nothing. So my bullish candles are blue, and my bearish candles are black. So the candles we are going to be looking at first are bearish engulfing candles. So this is a bearish engulfing candle. Let me first move it for you guys to see. Well, as you guys can see, market was brought up. So now, sorry, let me explain it better. This is how bearish candles are. Bearish engulfing candles. So this is a bearish candle. So this is how bearish engulfing candles are. Bearish engulfing candles are made by two candles. The first candle is a bullish candle, and then the second candle is a bearish candle that fully engulfs the first candle, the bullish candle. So this was the example. As you can see, the price was moving up, right? And then the bearish candle came and engulfed it, right? Which showed the bearish momentum in the markets, which made the market start dropping. So this is, by the way, all the candles we'll be looking at are reversal candles. So which made the markets reverse and then start dropping. So now let us look at bullish engulfing candles. Well, bullish engulfing candles look like bearish engulfing candles, just that it's the other way around. So as you can see, the markets were starting to drop for a bit, and then this small candle, small bearish candle was formed, and then a huge bullish engulfing candle came and engulfed it, which made the market start moving higher. Right? Let me see if I can find some more examples of bullish engulfing candles. Well, okay. As you can see, the markets were moving a bit lower, and then the bearish candle was formed, this candle, and then the bullish candle engulfed it, which made the market start moving higher. Right? So remember, these are reversal candles. Right? But also, you guys, this is a small disclaimer. Even though we are talking about reversal candles, it is not really reversal because, yes, the markets will move the opposite way as soon as these candles are produced, but we have to remember we have to move with structure. So Noe will explain more about structure. So you guys just know that you do not just use these candles and then see them in the markets and then just act upon them. It's not that easy. You also have to be moving with the market structure, which helps more. So now we are going to be looking at our next candlesticks, our next candle, which is a doji. So let's go back on GBP USD. By the way, these are currency pairs. Right? You can never trade a currency by itself. It always has to have a significant other. So in this case, this is GBP USD, which means it's the United Kingdom's currency against the United States currency. So let's look for doji. So this is the doji. Dojis usually look like this. The wick is in the middle. No, the candle is in the middle. Well, it can look like this, or it can have a small body, and then then look like this. Well, as you guys can see, the close it will always show you that the close is the same. Okay, the candles where the candle opened is where it closed, or it was near where it closed, and our exhaustion wicks almost have the same size. Well, this shows uncertainty in the markets, which will most likely reverse, right? So if you see a doji, this is a doji. If you see a doji on an uptrend, right, you should know that it might make the market drop, right? And if you see it in a downtrend, you should know that it might make the markets go higher. So downtrends is when markets are going lower. Uptrends is when the markets are going higher, right? So if you see a doji here, just know that the markets might start moving upwards. If you see a doji here, just know that the markets might start moving downwards. So this is what happened. The buyers were pushing price higher, and then a doji was created. When this doji was created, this showed uncertainty. This showed that the markets were not sure if buyers or sellers were in control, so they were not yet sure. So that imbalance made the market shift to the other side because it was normally bullish. Now it's going to turn into bearish. So now let us look at dragonfly dojis. No, we're going to look at gravestone dojis. So, let me find the gravestone doji. Bear with me. Yeah. So, this is how gravestone dojis look like. Or it can even be a body. But the body has to be small. It has to be way smaller than the wick. So if you guys remember, wicks are signs of exhaustion, right? So this means that the market opened here, right? The market tried to push higher, but the sellers pushed it down and made the candle close like this. So even though this candle can, for example, this you can see this candle's body is bearish, right? But as you can see, uh, the space covered by the sellers is much bigger than the space covered by the buyers, right? No, I meant this candle, right? This gravestone doji, right? You can see that the body is blue, which means it's a bullish body, but the space that was covered by the sellers in the markets is way bigger than the small body. So this is a bearish candle, even if it has a bullish body, right? So when this happens, this shows exhaustion of the buyers in the markets, right? Thus moving the markets down, right? So if you see this on top of a trend, right? So like here, so a trend is when not a trend, yeah, a trend. A trend is when markets are going either up or down, or down. So if the markets are moving down, this is a bearish trend. If they're moving up, this is a bullish trend. So as you can see, we got this gravestone doji on top of a bullish trend, right? Which ended up by making the markets drop. But then you guys should remember again, you do not only this is not the only things you look for when you're trying to take a trade, right? So this is a confirmation, but you need other confirmations. That's why we'll be also letting out more videos, but this one will be correlating more with the market structure video that Noel will put out next Monday. So as you can see, after this gravestone doji was created, markets started moving down. Markets came up a bit again and then created another gravestone doji, which dropped the markets. So when we are trading, we have to protect our capital, right? So you have a stop loss and a take profit. So in case of this, let's say you had taken this trade, the what is advised the most is that when you buy or sell, your stop loss should be higher or lower than the market structure, right? So in this case, the market structure is here, so your stop loss should have been here, which means you would have taken an entry here. Markets would have came back to your entry, but they wouldn't have taken you out, and then gotten another entry. This would have been the second entry, then capitalized off of all this, right? So let's talk about morning stars. Okay. Um, so morning stars, right? This is considered as a bullish reversal pattern, right? This often happens at the bottom of a downtrend. So let me show you how morning stars look. So morning stars are a bullish candle confirmation, right? So this is a bearish candle, and then after this we always have a small candle, right? Well, this, you guys need to remember this. This small candle can either be bullish or bearish. We don't really care, right? So it can be bearish or bullish, and then the third candle is the one that really matters, right? And then this candle has to be bullish, and has to at least be at the midpoint of the first huge candle, which is this one, or a bit higher to confirm our morning star pattern, right? So let me show you an example. So as you guys can see, markets were moving up, came back down, right? Huge, big bearish candle, small bullish candle, and then the third bullish candle closed higher than the 50% of this huge bearish candle, which made the market start going up. You see? Second example, you see the huge bearish candle, small bullish candle, and then this candle closed midway, so a bit higher than the 50%, by the way. Yeah, and then it made the market start moving higher, right? So now we are going to be looking at evening star candlesticks. So evening star candlesticks are pretty much this, but turned around, right? So this is the bullish, the bullish version, but we're going to be looking at the bearish version of this. So let me show you an example. So you guys remember, what we just talked about right now. Um, this is the morning star, right? So huge bearish candle, small candle, which can be bullish or bearish, by the way, and then huge bullish candle, not that huge. By the way, this can also engulf it. This can also look like this, right? Which closes at least midway or higher, just for better confirmation, right? So we're going to be looking at that, but vice versa. So we can see a huge bullish candle, small bearish candle with a small body, and then the candle closed at 50% of the huge candle, right? Which made the price start dropping. Interesting. You can see that here the body is bearish and here the body is bullish, right? So huge engulfing candle. No, not engulfing candle. Yeah, it engulfed it too, but huge bullish candle, and then small body candle, which is bullish too, which is actually a doji. But and then after that, the third candle we got was a bearish candle, which got to the 50% of the big candle, thus making price go lower. Right? I hope you guys are getting it. Right? So now we are going to be looking at pin bars or hammers. Right? So these candles pretty much look like hammers. Here's how they look. The body is small, but the wick is bigger. Well, what this shows, it's not necessary that the body has to be bearish. This can be a bullish body, right? But this is a bearish candle overall. You know why? If you guys remember, wicks are exhaustion, like represent exhaustion. So if the sellers were no, I meant this is a bullish candle, not a bearish candle. So this can actually, the body can be bearish, but this will not mean that this is a bearish candle, right? Because the wick or the exhaustion that we can see from this candle shows us that buyers covered way bigger space than the sellers, right? So let me show it to you guys on the charts. Mm-hmm. So nice. We also have a hammer which has a bearish body, which is actually better, right? So we can see the markets were moving down, and then this candle, at a point, this candle got here, right? But it didn't close here. Then bullish momentum kicked in, right? Making the candle close here, showing that this was an exhaustion point. This was a point of exhaustion, right? Which made price start going higher, right? By the way, remember that these candles that we're looking at are effective at the bottom of a trend or on top of trends, right? So we will be looking at these candles on top or at the bottom, never in the middle, right? So if price starts playing around like here, then you see a hammer here, just try to ignore it, right? So as you can see, this hammer happened, and then by the way, this can also be an evening star, and it can also be a bullish engulfing candle. But we are only looking at the hammer, right? So the hammer is only made up by one candle. Right? So we can clearly see a hammer here, which made price start moving higher. Then price came again lower, and then we got another hammer, and then price went again high. And remember what I told you. When you are taking a trade, right, because we have to protect our capital, we have to put stop losses and take profits. So had you taken this trade from here, you would have put your stop loss here. So even though price came back down here, this would have been another entry, 2 entries, and then you would have capitalized from all this, and price would have not taken you out. Well, it would have depended on what type of trader you are. You would have probably decided to hold it or let it or just take it out after a small time, right? So we are going to be looking at the opposite of a hammer, which is a shooting star, right? So a shooting star looks like this, and shooting stars are bearish candles, right? Even if it has a bullish candle, remember the exhaustion of the candle is way bigger than the body of the candle. So which means even if the body might look bullish, the entire candle is bearish, because the space covered by the bears in the market is bigger than the space covered by the bulls in the market. By the way, bulls, when I say bulls, I mean bullish, and when I say bears, I mean bearish. Right? I hope I'm not confusing you guys. So let me show you guys an example of a shooting star. By the way, as you guys can see, I am moving from time frame to time frame, right? So you guys will also learn how to trade according to the time frames you're using. The higher the time frames, the more significance in the markets, right? So if you see a pin bar on the daily, it's more significant than a pin bar on the 5 minutes, right? So again, fun fact: you see when we talk about time frames, this example I showed this to you guys. This on the hourly is a bearish engulfing candle, but you can also see on the 45 minutes it's a shooting star, which means had you seen this, that would have been a double confirmation. And with that, it also comes with an evening star candlestick pattern, right? So a bullish candle, the small bearish candle, and then engulfed it. So this would have been a bearish engulfing candle on the hourly, and then it would have been an evening star on the 45 minutes, and it would have also been a shooting star in the 45 minutes. Those are good confirmations, and then for sure you can take that sell, right? So as you can see, the bulls tried to move price higher, but the sellers brought price back lower, thus leaving this exhaustion area, which also left this week to represent that buyers were once here but couldn't hold it, right? Which also made the markets move down, right? So with only this with only the example of this shooting star, you could have capitalized from this. Well, this was a good movement. And again, depending on the type of trader you are, you could have held, or you could have just taken it out after a small amount of time if you don't really have a big risk appetite. So now we are going to be looking at Harami patterns, which are also referred as the pregnant pattern. Well, candlestick. I forgot to mention candlesticks were made by the Japanese people, right? So Harami means pregnant. So the Harami pattern is made of two candles, right? So there is the big candle, right? Well, oh, by the way, fun fact: Harami candles can be continuation candles or reversal candles. So these candles are actually hold a bit of difference from the other candles, right? So we can see the big candle here, which represents the mom, and then it also has a small candle, which represents the baby. So if you see this on the bottom of a downtrend, at the bottom of a downtrend like this, like here, right? And then you see this, you should buy it. And if you see it, and if you see this here, okay, yeah. If you see this here, and then if this is the baby, and if you see it on top here, you can sell, right? So let me show you guys an example. Um, so now let me even give you the example on Bitcoin, because I'm pretty sure you guys are familiar with Bitcoin, and this is actually how Bitcoin movement is made, right? Well, news can move it too, but it's also traded, right? So some people can choose to invest in this, or you can just go trade it firsthand, right? Mhm. So we can see that the price was being pushed up, right? Huge bullish candle, which is representing the mom, and then small bearish candle representing the baby, and then from then the market started dropping, right? Now let me show you a bullish example of the Harami candle, right? Candlestick pattern, right? So as you see, price was moving higher, and then went down for a bit for a correction, and then this huge candle represented the mom, this huge bearish candle, then this small bullish candle represented the baby, and then from then the markets pushed higher, right? So yeah, I hope you understand these, because these ones are like you don't really notice them in the markets because they do not really distinguish themselves as others, because you can't really tell, but then just try to remember them because they really work, right? So we are now going to be looking at the last candlestick patterns, which are tweezer tops and tweezer bottoms. So this is how tweezer tops and tweezer bottoms work. Tweezer Tweezer tops and tweezer bottoms are made up by two candlesticks. Right? The two candlesticks can be almost the same size. One can be a bit smaller or a bit longer, but most of the times they might even be equal. Right? So see this bullish candle. Let's say price was moving up, then created a bullish candle and then a bearish candle, which almost equated the bullish candle. Well, this will most likely push price lower, right? So let me show you an example. On silver. See, a lot of things can be traded. It's not just forex. We have commodities. We have forex. We have we also trade companies like US 30, the Dow Jones, and cryptocurrency too. So it's a really big industry, right? So this is the example of a tweezer top, right? So price was being moved up, right? Touched a certain area. This area was actually drawn by me, right? Okay, obviously it was drawn by me, but it was to take the trade, right? So Noe will also explain this because this includes market structure. So market drop, go higher, they drop, and then come back for a correction. Then this is when you look for these candlestick patterns, right? So bullish candlestick and then bearish candlestick, right? This was a Harami pattern, right? No, not a Harami, a tweezer top pattern, right? Which made the price move lower, right? So price is moving down, moving up, moving down, moving up, right? And then you get this, sell the market because it will most likely go through, right? And then let me show you the tweezer bottom. Yeah. So as you can see, the markets were moving down, they went up, they moved down, and then you got the tweezer top, the tweezer bottom, which moved the price up, right? This actually has a lot of confirmations. This is you would consider this a double bottom, but these two you will learn in market structure. And then you got the tweezer bottom. So all you had to do now was set your buy, set your stop loss, set your take profit, and then wait and see what will happen. Right. So this is the end of the video. Stay tuned for the next video on Monday. Hit the notification bell, yeah, so that you can be reminded that the second video is out. Okay, thank you. We'll see each other on the next video. So we'll see each other basically in 2 weeks. Yeah.